Hi, my name is Will, the AI assistant for Jim Pepa, the head of tax at Officeheads. Today we're going to talk about starting a business, even a one-person operation. This is part of our educational series, When to Talk to Your CPA. Starting a business is exciting, but the first decision is a big one. What type of legal entity should you form? If you don't actively set something up, the IRS treats you as a sole proprietor by default. That setup is easy and low cost, but it offers no legal separation between you and your business. That means if something goes wrong, your personal assets could be on the line. You can run the business under your own name or register a DBA, doing business as, with your state if you want a business name. If you want more protection, many solo business owners choose to form an LLC, a limited liability company. It's relatively easy and affordable to set up, and it shields your personal assets from business liability. For tax purposes, a single-member LLC is treated just like a sole proprietorship, meaning all the income and expenses flow through to your personal tax return. No separate tax return is required. Some entrepreneurs go the route of forming a corporation. If you incorporate, the IRS will treat your business as a C corporation by default. That means your business files its own tax return and pays its own taxes, currently at 21% federally. But you can elect to be taxed as an S corporation instead. S corporations are popular because profits pass directly to the owner's personal return, avoiding the double taxation that C corporations face. S corporations still file a separate tax return, and the owner must take a reasonable salary through payroll. Once your entity is formed, your next steps are all about getting your business properly set up. First, get an EIN from the IRS. It's like a social security number for your business, and you'll need it to open a business bank account. And yes, opening a dedicated business bank account is a must, even if you're a sole proprietor. Keeping your business and personal finances separate makes accounting easier and cleaner at tax time. And don't forget bookkeeping, whether it's a spreadsheet or software like QuickBooks or Xero. Tracking your income and expenses from day one will save you a ton of headaches later. Now let's talk taxes. As a sole proprietor or single-member LLC, your profits are subject to both income tax and self-employment tax, which covers Social Security and Medicare. That's 15.3% of your net income, and unlike working for someone else, you pay both the employer and employee portions. If you're an S Corp or C Corp owner, you're required to pay yourself a salary, and depending on your income, you may also need to make quarterly estimated tax payments. As you can tell, there are a lot of important decisions to make when starting a business. From choosing the right entity to understanding your tax obligations, getting things right at the start can save you money, time, and stress later on. Officeheads provides this and other tax advice to its clients. Jim is here to help with any questions you might have. Thanks for watching, and best of luck with your new venture.